Yeah.
It's already 55 minutes. What's going on here? But we're really grateful for how you have given us this charge to lay the right context for this summit, and for us as HR professionals generally. We really thank you for sharing of your experience. A couple of people have asked for the slides. For as many speakers that we can get their slides, we will send over to you via email since you registered. So don't worry about that. Thank you very much. Thank you very much. I really appreciate
sorry, Tosin, just a minute. I have a gift for people.
Oh.
Okay, so the first 50 people to share their testimonial from this session and key takeaway will get a free copy of my book, because some people have asked how can they get the book and all that.
Okay.
You can get a free copy sent to you through the organizer of this program. Okay. If you go to ownership team, that's oteam@ownersinstitute.com, between now and tomorrow, 6 p.m. tomorrow to qualify, just send in your testimonial and key takeaway, and then they'll send a copy of the book to you, okay? And then I'm releasing my next book in September, basically. And there are 4 negotiable I would like to leave with you guys. Whatever gap you have in HR, know it, own it, close the gap, and whatever you do, never, ever stop learning. Never, ever. Whatever you do, always learn. Thank you very much, everybody. That's it from me.
Thank you so much. Thank you so much, Mr. Olagunjo. Really, and thanks for the closing nuggets. Really powerful there. I don't need to have to cap it up again, because I think that's the best cap we can have for this session. Thank you very much.
Thank you. Thank you.
Thank you so much.
So I can go off now. Yeah.
Yes, you can. Thank you so much. Thank you. Moving swiftly on from this point on, it's going to be fast-paced. Like I said, there are more TED-like talks, 20 minutes max for each of the presenters. I'm now going to be turning you to the next facilitator who will bring on the next speaker. Tinuke, are you ready for us? Can everyone hear me?
Yes, we can.
Is Tinuke on? Shay?
Hi, Tinuke needs to be unmuted, please. Emma.
Tinuke, please go ahead.
Okay. All right. Thank you, Emma, for finally setting me free. All right. It's been an interesting and engaging session interacting with Mr. Olagunjo. I mean, it's all about the business. If HR is not connecting to the business, then HR is not making impact. Yes, we are moving on the business train. Now we are going to be talking about financial acumen. I'm sure you know that that is entirely related to business also. Amaka Akinteya will be taking us on that train. She will be our coach on that train. I'm going to run quickly through her profile before she takes on the stage. Amaka Akinteya is the senior managing partner and founder of King Livingstone Consulting, a management consulting firm that specializes in accounting, finance, marketing strategy, and human capital development. She's a member of the Institute of Chartered Accountants of Nigeria, a fellow of Association of Chartered Accountants, ACCA UK, and a member of the Chartered Institute of Taxation of Nigeria, CITN. Amaka holds a master's in finance and investment from the prestigious Sheffield Hallam University in United Kingdom, graduating as the best student in her class. She has tutored over 1,000 professional level ACCA students to excel in corporate governance, risk management, business strategy, and finance. She has also helped several businesses please hold on. She has also helped several businesses restructure and grow. Amaka is a prolific writer. She manages her own blog where she shares poems, life experiences, and motivational thoughts. She's happily married with 2 awesome boys. In the next 20 minutes, Amaka will be taking us on the journey of financial acumen for professional. So if you're an HR, some people say, oh, I don't like numbers, so I just went to HR where I don't have numbers. Sorry, you may have to have a rethink, because financial acumen is a key skill required for today's HR. So I'd like Amaka to come up on stage now. All right, she's sharing her screen.
Thank you.
All right, welcome, Amaka. Good to have you here.
Thank you so much. Yes, same here. Thank you so much, Emma, for the opportunity. I mean, we've talked about it. And Bolaji, thank you so much for that awesome session. I mean, as he was talking, I was like, oh, he's just saying everything I'm supposed to say. Why is he saying that? Okay, so I'll just quickly go into this session, financial acumen for HR professionals. And I'm looking at the fact that before we can, be successful as individuals, we should ensure that, or understand that, preparation precedes prosperity. So in whatever we want to do, we have to be prepared. If we're to be shifting our, orientation from just the functional HR, person or resource, we have to be prepared. We have to understand that there are areas that we need to, shift our orientation or change our orientation. And then, financially responsible HR, people. Bolaji mentioned that a number of HR people don't even know what revenue, what's the business doing. I've been opportune to be in a number of interviews. I co-own Talent Bureau, that is an HR company, and I have interviewed individuals. I've interviewed even HR professionals and people in the department, and then they go on and on to, get angry about the fact that they downsized, and then they were part of the people that were, downsized, or their salaries were slashed. And the question I asked, do you know why your salaries, the salary was slashed? Do you know why, you were downsized, or the people in the organization? And they say, well, yes, they told us because they were not really making money and all that. I also manage businesses. I run other, businesses, and I'm a CEO, and I hire staffs too. And then, so I expect my staffs to understand. In fact, in the organization, every member of the organization sees the monthly reports of financial performance of the organization every month. And then you see it black and white. Your performance is black and white, because businesses have gone beyond revenue and hitting the targets. It is now cash-based, it's liquidity. So, and I would liken it to a situation whereby you own so many assets, but when you need money to buy food, you don't have it. That means you're not liquid. And that is how organizations are. Organizations need money to pay salaries, need money to do a lot of things, and they don't see it, but business is going. So it means that what you see on the financial statement is not all that should be there. Money must be in the account, and HR is the critical area, because in finance we say the human resource is the asset of the organization. And what do we mean by asset? We say that assets of the organization is the resource that generates financial benefit to the organization. So if human beings do not generate financial benefit to the organization, then that means they are depleting it. And that is where HR should come in, by helping the organization generate financial benefits to the organization. And so financially responsible HR, what are the things they need to know? HR as a strategic business partner. Bolaji has mentioned that. I will just talk about it briefly. The importance of HR budgets. A number of HR, don't do their budgets before the beginning of the year, quarterly, or periodically, or biannually, or yearly. It could be a rolling budget. There are different kinds of budget which you have to review every time. Now, the power of HR on revenue generation, and that's where motivation comes in. Bolaji mentioned that aspect too. Your revenue, who generates revenue? It is the human resources that generate revenue, the employees that generate revenue. Different employees, you know, within the organization, you have the marketing department, you have the sales, you have the customer service, you have the different people in the organization. They are the ones responsible. So now how is the HR department ensuring that the performance of individuals are up to, you know, up to the required KPIs such that they are productive? Another part is the impact of HR cost on the business itself. Bolaji also mentioned that when HR say, oh, we want to train, we want to do this, we want to do that, what is the implication on that, you know, on the organization? Can the organization carry that cost at this point in time? Understanding the financial performance of the organization, I've said it before, it has gone beyond the figures, the profit and the loss statement. It has gone to the cash, the liquidity. Are we buoyant enough to do what we used to do before? In the next 5 years, how will the company look like? What is our profitability? What is our financial standing in the next 2 to 3 or 5 years? The HR must understand that. Understanding the impact of productivity on financial performance. Like Bolaji said, you complain, employees complain. Now, what is your level of productivity, you know, within the organization? HR needs to understand that aspect. HR as a strategic business partner. Bolaji mentioned that aspect. That's why I'm using the David Ulrich 1997 model, that he looked at the 4 roles of the HR. And the HR has gone beyond being a cost center, because we used to know HR as a cost center. Now HR has gone beyond that to being a strategic partner. And the strategic partner is the partner that aligns the HR goals of the organization with the business goal. And what is the goal of the business? The goal of the business is to generate revenue, is to manage customers, is to increase market size, is to increase financial, you know, position, is to be in existence within or beyond the foreseeable future, is to be a going concern. There is no business that starts and wants to close down in the next 3 to 5 years. And then the statistic shows that an average company that starts has within 5 years, and they shut down, especially in Africa. And why is that? It is because what needs to be done is not done, in the sense that all the strategic partners are not aligning in their goals. So it's time for HR to align their goals with the business goals, which includes finance, because without money in the business will definitely crumble. I know it's not popular that in Nigeria we have bankruptcy, you know, people, you know, organizations rendering themselves up for bankruptcy, but it is very, very critical. And then you look at the next area, which has to do with managing change. Bolaji has spoken, there's need for shifts. There is need for change. The role of the HR in shifting the members of the organization, apart from the cultural aspect, the leadership aspect, motivation, understanding that these are the times, this is COVID period. They need to tell the employees, we need to work harder, we need to work with less staff, we need to downsize. This is why we need to downsize. They have to explain to them, and that's a change partner. So they are working together with the goals of the organization. And then this is the administrative partner, which is the usual, you know, role of the HR, you know, recruitment and then all that. And then you have the employee, you know, partner, being the advocate of the employee, which is supposed to be the role of the HR. So but the area we'll be looking at mostly is, yes, the strategic partner, but understand that without you forming like you know, fusing these 4 roles together, you cannot specialize in one area. And that is where most HR, you know, professionals miss it. They want to be the employee advocate, and they forget the fact that they are administrative partners, change partners, and strategic partner. They don't work with the CEO to become a change partner. Now, this is the statistics that was carried out by ACCA this year with the 500 top CEOs, you know, in China, India, Malaysia, and some other countries, and then saying, what are your top concerns with respect to business risk management in today's current environment? And then the critical areas that they looked at are were actually keeping my employees safe and productively employed. These were the areas that, I'm sorry, we have a bit of power outage, but I believe it's going to come up soon. Then the other aspect is providing a safety net for my employees through additional benefits, short-term liquidity. Another area is dependencies on federal, state, and local government. I know this doesn't really apply to us. Supply chain continuity, impact on my customers, and uncertainty with the business continuity or vulnerability. So in this sense, the HR partner should understand these areas, and this is what the CEOs are saying. The last part is the economic forecast and uncertainty with demand for my products and services. Now I want to run through which ones were the highest. Now the highest is number 1, and it's looking at keeping my employees safe and productively employed. Because I've spoken to some of my friends who run companies, I mean, when the COVID started, and the number of them said, oh, I'm incurring so much cost. Some of them just said, I just found out that I didn't really need this number of staffs. They were not doing anything, they were just collecting salaries. And that is an area where HR is also missing it. And I know Bolaji said it. So they just are involved in, how do employees, because they are also HR and they wouldn't want anything to affect them. So they think it's just to keep employees feeling good. That is the solution. Please, what time am I ending, Emma? Because I know I was supposed to start by 5, and the questions for Bolaji, went into there. So what time exactly am I supposed to stop? Hello, Emma.
5:30.
5:30, awesome.
Yes,
okay. So importance of HR finance. Now, HR as an asset of the organization, I've mentioned that. HR aligns business goals to HR, reviews organization staffing needs, avoids overhiring, prevents understaffing. Now, if the HR understands the fact that the organization, the funding in the organization are this and that, they would understand that the staffing needs to be looked into. So we'll look at the budgeting aspect. Understand your business financial performance. I've said it. What is the bottom line? What are the figures saying? The HR must understand that. Understanding the revenue, profitability, and liquidity of the organization is key for the HR. If you don't understand it, you begin to, put in budget and ask for vacations for employees and ask for trainings abroad and things like that, when you are plunging the organization into more debt. Because if you understand the liquidity of the organization, you will know if your company is highly geared, in the sense that how much debt is your company carrying. Some big companies carry huge debts, and that is where you need to work with the CEO. That is where you need to be a strategic partner, where you argue reasonably, where you criticize constructively, where you make strategic decisions regarding expenditures within the organization. But if you are just carrying out the normal HR function, you won't be involved in strategic decision making. Understanding the product portfolio and performance. Now, the product portfolio is based on the different strategic business units that the organization, have. You understand what is the performance of all the portfolio, what is the performance of all the products. Do we have products we need to scrap? What are the stars we have? What are the dogs that we have? What are the cash cows that we have? Are there products that we need to, diversify into? What is the new thing? What is the trend of the market? If you don't look at your figures, you won't know that. Understanding customer management analysis is very, very key. How can you attract top talents? This is so key. And then project implementation. Being part of project implementation, HR must be involved in all projects within the organization, because you need to know, is there any new function that is going to crop out of this? How is it going to cost the organization to hire a new function? But is it necessary? Do we have assets within the organization that can replace this particular role? Is it something we need presently? Those questions, and then constructive arguments that you put in during the project implementation plan. And then another aspect is, yes, that's budgeting for human capital strategy. Now, budgeting cuts across your recruitment every facet, but now we're looking at the HR. Recruitment, trainings and development, employee compensation, employee benefits, and all those. Now I will say this quote: by Desmond Washington. He says, do not confuse movement with progress. So a lot of HR are in the HR seat, and they think, yes, we are doing the right thing, we are the HR of the organization, and yet they're just making movements. The organization is not making progress, and they are collecting salaries, they are earning big, they even have team members, and nothing is moving. Recruitment budgets. HR, you must know what is the cost of recruitment at the beginning of every year. And what are the things you need to impute in your budget? The number of employees to hire in the year. You can't hire at random, except you have, staff turnover. And Bolaji had already talked about the staff turnover. What is responsible for the staff turnover? Could it be that we are hiring the wrong people? And that is where you look at the yield ratio of your recruitment process. How often do you need to hire them? It has to be in the budget. Are you going to hire quarterly, or are you going to hire every year, or are you going to hire every 2 years? And what roles are they? What is the total cost of the staff that you're hiring? How much are you placing on them? You have to inform the finance department about this at the beginning of the year. And so we can make plans for that fund. And so the finance department might have those funds, but it would be good for them to invest it in a worthwhile investment, maybe treasury bills, or because the treasury function. And then that money will yield funds so that when the HR is ready to incur those costs, the money is taken out. And then cost of succession planning. What is the cost? You need to know. Sometimes an individual has not left the organization, and then the HR is hiring someone to replace the person before the person leaves. Why don't you, so what is the cost of simultaneously paying 2 people on a job before the first person moves out? What is the cost of succession planning? How are you planning those things? It has to be in your budget. Whatever kind of budget your organization is adopting, it could be rolling budget, it could be, periodic budget, it could be zero-based budgeting that you start from the scratch every year, knowing fully well that the environment changes at every point in time, and it could affect the prices that you have placed. Maybe the market, the job market is actually evolving every time. Training and development budget. What is the cost of training? It has to be in the budget. Frequency of employee training. You need to have that prepared at the beginning of the year, so you don't take the organization unawares and begin to grumble when people don't go on training. Cost of talent management. Employee engagement costs. Employee compensation budget. Commissions, overtime wage, bonus, stock options, retirement incentive. You must have a budget at the beginning of the year. Employee benefit budget. Your HMO, what is the benefit? Your health maintenance plan, retirement plan, leave plan, all those things. Your HR, all those things. The payroll cost. Have you thought of the cost of pension on your organization? What's the implication? How many staffs do you have that the organization has to pay 10% of your salary, the basic salary, into their pension plan? And then they have to do that. I mean, they're doing something great for you. I heard Bolaji talk about, taking ownership. And whenever I'm employing staff, I'm looking for three things. I use the principle of WAR. That's my principle. WAR. W means willingness. A means ability. R means readiness, reliability. If I don't see these 3 things in an employee, then I'm not going to hire that employee. And I'm looking at willingness. I'm looking at character. I'm looking at integrity. I'm looking at ownership. I'm looking at ability to take commitment. Ability to be committed to that job. These are the kind of things we'll be looking at. I want us to also read a book by Dr. Rhys Brisby. He talks about the lessons from a 3rd grade dropout. When my son heard it, he said, why will I be learning from a 3rd grade dropout? I said, read the book, and then you will know why his son learned from his dad, who is a 3rd grade dropout, and the lessons you need to learn as an individual, not just as a HR person. So what are we talking about? Financial reports. I don't know. This is the easiest financial report I could, come up with in the sense that I just had to paste it and say, you have revenue. Companies generate revenue. From that revenue, you have to take out the cost of incurring. So when you're an HR person and you hear that your company made a revenue of 20 billion, that money is not basically for spending, because there was a cost incurred in selling that item, or I mean those products or service. It is a service-oriented organization. So you're going to take out that cost from the revenue. What you have left is what they call gross profit. And after the gross profit, you have to take out all the expenses you incur on a monthly basis. I put something on red: staff cost. Staff cost is usually huge, and that is what kills most SMEs, because people come and say, I'm going to charge this, I'm going to charge this, without knowing how the company is performing, without trying to understand that we need to work hard, we need to, be committed, we need to take this business as our own for us to make money. And that is where the HR should be the advocate of the employee, acting as the intermediary between the employer and the employees, not just the advocate of the employees, but also the advocate of the employer. And that is where you act as the strategic business partner. And then you have the other costs. This is the net NPBT, the net profit before tax, is where the company now looks at and say, okay, this is what we have left, that we will continue business. And then you have the net profit after tax. I mean, the government takes that tax, 30% of if you are making over 25 million as your profit, as your turnover at the end of every year. So that's another story for another day. So these are the things you should be asking. You should be asking the CEO, you should be asking the finance department, what was the revenue? And if you know this, it will help you to handle the ratios on a monthly basis. I have to go back. Sorry, my slides just flew ahead of me. Now, financial ratios for HR. I have 3 minutes. Percentage of staff cost to revenue. HR, you need to know what is your percentage cost of staff to revenue. If the staff cost to revenue is above at least 30 to 40%, then you're incurring so much cost. You're incurring so much cost, your staff cost. Percentage of staff cost to gross profit. I mean, you should have it as low as possible, because if it is up to 40%, what of the cost of producing or selling those services or products? What is the percentage? Because the cost could be like about 30%, and then you are having your own cost up to 30%. That's high. Percentage growth in staff turnover. Like Bolaji said, you need to identify what this growth, why staff turnover is increasing and why it's not increasing. So you need to investigate that. And that is where budgeting comes in, because budgeting is, this is what we are expecting. So this is a forecast. This is how much we are going to spend. At the end of the period, you now have to, calculate the actual figures, and you look at the variance. Now the variance calls for investigation. Why did we budget for 5 million naira to hire staff for this year, and then we are having 10 million naira on the financial statement? Why? You begin to investigate. Do we have ghost workers? Did the price in the market increase in terms of the cost of COOs and things like that? You need to ask those questions. Percentage growth in recruitment, demand ratio, staff to customer ratio. Now you need to know how many staffs do you have and how many customers do you have. If they don't outweigh each other, then you have to look into it. Personnel to yield ratios. When you put an advert, how many people come in, how many people register, and then are seeking to be applied to get application. HR to staff ratio, that's another thing. How many HR personnel do you have in your average employee age? You have sometimes, by the time you calculate the average employee age in an organization, then it's like 55, it's like 45. Why? You should have at least more young people in the organization. So the age should be like below 50, so that you have more productive, more agile staff. You have to calculate the return on investment in HR, the revenue HR is generating, the cost HR is generating, and find out what is the return on the investment that we have made in HR. Comparative growth analysis of staff performance after trainings. You need to do it, measure KPI. And then at the end of the day, I also want to advise that at the end of this session, alternate your mindset, alter it in the sense that you shift from the bad to the good. You shift from what you used to know to what you need to know. Then you press your control button and then control those things that you need to control as an HR that you feel that are not beneficial to the organization, by, talking against the organization and then, doing those, because I know that when you have a negative mindset, it also affects your productivity within the organization. And you also have to change the orientation of your staff. I mean, HR is a leader.